this narrative is just going from one thing to another. We've gone from trade war on to trade war off to strikes on to strikes off. How do you keep up with that, and do you bother trying to keep up at all?
Which mic? This mic here?
This mic right next to me.
I think it's so important as an investor to discern what matters for the long run for an economy and what is a short-term headline. And Bloomberg Television is amazing because it keeps people up to date on what's going on. But to some degree, the daily focus on movements in small pieces of markets and how they react to small pieces of data really can cloud the important view. And so I think that obviously if things get really bad in Syria and there's potential real significant escalation of challenges between U.S. and Russia, that becomes a macro issue, but the probability that's pretty low. So you obviously want to watch these things very closely as well as trade, but you need to think about what impact on the economy. And so right now in terms of Syria, probably not an impact on the global economy. Secondly, in terms of trade, not large enough to have a 1% impact on GDP yet. Now, obviously, an all-out trade war is a different story, but as of now, we don't think we're going to get there. And so it's very important to discern what's a short-term factor and what's a longer-term factor.
And Gina, to that point, just to echo that, if you look at the market pricing, you've seen all this volatility in equities over the last couple of months. How many people do you know that have taken out their rate hike forecasts for 2018 based on what's happening? I don't know many. I haven't seen any, not on this show.
No, and I think that's because the economic data has yet to be reflected. I mean, an investment strategy framed by tweets is not an investment strategy, right? And I think that we're seeing a lot of the near-term movement in the market just based on what the president tweets overnight or early in the wee hours of the morning. Unfortunately, that's not an appropriate way to frame a portfolio allocation. But what is what is the long-term outlook for earnings? What could the Fed do to deplete the valuation multiple? Where might interest rates be going? Where's our oil prices going? Where are commodity prices going? So you look for trends in the real data to emerge to frame an investment strategy. And what we're hearing in news is not yet real data. Even the tariff announcements are simply proposals. These are not actually enacted.
For proposals.
Right, exactly. So there's a lot potentially that could still happen. So far, a lot of this is a lot of talk and not a lot of action. Until there is action, it's really difficult to implement in portfolios.
Michael Purves?
If you zoom out and you just think about the macro backdrop, it's really very benign. The dollar is not rallying. Rates are behaving themselves. The growth in the U.S. is really pretty good. Growth overseas has been slowing down, but it's still really pretty good in the context of things. So what's really interesting to my mind is seeing how the VIX is, how isolated it is in terms of a sort of a global volatility metric. In the past few years, you'd often seen all these things, the VIXs of other equity markets, the MOVE index, FX volatility, all kind of move up in tandem here. But the VIX is really isolated here, and I think it's revealing a couple of things specifically about the U.S. equity market story.